listeners. I hope all of you are doing good. This week, as I told you last week, that this week will be full of news flows. The Reliance AGM was over. There were no positive surprises on that front. In the Adani Group stocks, again, there were multiple news flows which came out. The thing which stood out for me in the current week was that most of this economic data which came out of the US was on a downtrend. So this again raised hopes that the Fed's interest rate cycle is coming to an end. So this actually protected most of the major markets from falling sharply, and markets reacted mostly on the positive side. So what is there in store for us the next week? The automobile numbers came out today. So again, the trend was very clearly visible that the premiumization is happening. On the four-wheeler space, the SUV is gaining traction. The entry-level cars are still lagging in growth. In the two-wheeler space, Eicher Motor is again doing good with its Royal Enfield range, and Hero and Bajaj are still struggling with their entry-level bikes. So with all this El Nino effect again coming into the markets with a lot of deficiency in rainfall in August, we believe that you should be cautious on the rural play at this point in time, and also on the FMCG pack as well. What we are positive on is metals for the short term, especially because we feel that whatever measures China has taken in the last 2 weeks, this should actually boost demand for metals. Another sector which is on our close watch is chemicals, which we feel that the time is ripe now to enter slowly into the chemical sector stocks, especially with chemical prices showing signs of bottoming out. Few chemicals like caustic soda, bromine have already moved handsomely in the last 1 month. We expect some traction in chemical stocks going forward. Another thing which everyone should keep an eye on is crude oil prices, which is slowly and steadily inching upwards. So that's not a very good news for India in a situation when the Russian crude oil premium is decreasing slowly. So we advise investors that be cautious on the index front. Wait for either of the levels, especially 19,200, 250 on the downside to break, or 19,600 on the upside to break, to get a clear picture where the markets are heading on. Be stock specific in your approach in the next week rather than being index specific. So that is all from my side. Thank you, listeners.